Hello there. I am Ramki Ramakrishnan, the author of the best-selling book on Elliott Waves, 5 Waves to Financial Freedom, which all of you have come to love. Over the years, I've been receiving numerous requests to conduct online seminars so that people from around the world could watch the videos and learn from them. The video you're going to watch is my maiden attempt, a test run of how my videos might look like. I request you to kindly share it with your friends on the social media and also contribute your comments on what I could add in the contents, what are the topics which you would like to see, and how you would like me to present it. Once I receive your feedback, I will commence my recording and put it all together and then publish it. Thank you for taking time to watch this and look forward to hearing from you. My email address is ramki@wavetimes.com. Thank you and goodbye. So here we are looking at the daily chart of the Bank Nifty Futures continuous chart, which is why it says C1 here. It's a continuous chart. And I'm recording this around 10:50 in the morning of the 16th of November. As you can see the date on the top left hand side. The current price is 26,304 and it opened at 26,202. But yesterday, which was the expiration date, on 15th of November, the last price was 26,195 and the range was from 25,905 until 26,255. What we are trying to show you is how you could have used Elliott Wave analysis to position yourself profitably in the Bank Nifty futures or options for the expiration date. The first thing I'm going to do is to go down the time frames to the very short-term charts, let's say the 5-minute chart, because you're trading intraday on the expiration date. And then I'm going to squeeze it up a little bit to show you a significant low over there. This low on the 26th of October was around 24,444. Then we see a clear 5-wave movement happening here. This is the wave 1 over here. The second wave came down here, the third wave, and then we had a sideways movement that lasted quite a while, and then we set off on the 5th wave up here. So on the 14th of November, the day before the expiration date, the closing price was 25,981. So we closed somewhere around here, right? On the 14th of November. So how would we know whether this 5th wave has got more room on the upside or not? But before we get there, I want to show you how I would look at these waves and see if they are really, the third wave has really ended here or not. Okay, so I do this, draw the projections from the bottom of wave 2 and see that the 161.8 projection ended right here. So that was the end of the third wave. And because the second wave was deep, I would expect the fourth wave to be elongated and sideways. You will also see that the fourth wave came down to 38.2% retracement level of the third, right? So you would put the end of the third wave here and the bottom of the fourth wave here. Just in case I do this and say if this is the end of the third wave, this is more in matching. But for our purposes, it doesn't matter whether you choose this or this as the top for the third wave, because the difference is very, very small indeed for traders. So to determine where the 5th wave will actually head to, I use the technique taught in the book 5 Waves to Financial Freedom. I measure the distance from the point 0 to point 3 and project it from the bottom of wave 4, and I see that the 5th wave potentially could reach 26,349. There are two other levels, which was 25,998 and 26,173, And why would I not expect it to finish somewhere in these two areas? Let's go down to the 1 minute chart. All right, and now we start counting from here. Even by looking at this chart, we can see that this was the third wave because of the gaps here, and this was a sideways fourth wave movement. So we could just do some test runs like this and see that potentially the third wave had extended, right, to more than 200%. Yeah, that was it. So the third wave ended at the 223.6% projection of the first wave, and then we got an irregular fourth wave. All right, A, B, and C. And once again, just like we did in the higher time frame, we see that if we draw the retracements from here, it ends exactly at the 50% level. Now we know that one of the three waves tend to equality, and interestingly, this 100% measure comes very close to what we had anticipated in the previous look at the 5 minute chart I was showing you. This is the first wave, second, third, fourth, and the fifth. So once again, we come back to the 26,349 levels. So this is where we would expect it to end at that time. Of course, when I'm looking at this, I'm looking at the 15th November chart already. But at the beginning of the 15th of November, when we were still somewhere here, I would be looking for it to move to 26,350. And therefore, my positions would be to sell puts with strikes of 25,800 onwards. I could choose this strike because the first wave top would also offer support. So although initially I would start off with selling puts here, as the day progresses, I will sell puts here or 50% pullback of that and keep moving up as the time elapses so that I maximize my profit potential. So now we know how we can use Elliott Wave analysis to determine profitable trades in the options market on an expiration date.